Having shelter over one's head is a basic fundamental need. Nobody wishes to spend the rest of their life paying rent to some landlord. Unfortunately, owning a home anywhere in Africa is really expensive due to several factors, including the issue of high mortgage rates. A mortgage, also referred to as a mortgage loan, is an agreement between you, the borrower, and a mortgage lender to buy or refinance a home with money provided by the lender. This agreement gives lenders the legal rights to repossess a property if you fail to meet the terms of your mortgage, most commonly by not repaying the money you've borrowed plus interest. A mortgage rate is the rate of interest that is charged on a mortgage loan. It is the amount of interest that a borrower must pay to the lender in addition to the principal amount borrowed. Mortgage rates can be fixed, meaning they stay the same for the entire duration of the loan, or variable, meaning they can change over time based on market conditions. So, have you ever thought about purchasing a property in Africa? Well, worry no more, as we are about to take a look at the 15 African countries with the lowest mortgage rates in 2023, so watch this video to the end to find out. Let's begin. 15. Cape Verde. In the past, Cape Verde was essentially rural. Today, the country is projected as a developing country with an intensification of the urbanization phenomenon. The Cape Verde housing market has the potential for attracting capital appreciation. Housing administration in Cape Verde is also complex due to the absence of a land register to regulate land ownership. A land register would guarantee the correct identification of buildings and solve problems of mismanagement of land resources, and would aid local development. If mortgages become more readily available at attractive rates, then prices will rise. The pioneer investors who spot the potential make the most investment gain. Cape Verde has a mortgage interest rate of 9% as of January 2023. 14. Lesotho. Lesotho has a low-income economy and a relatively high poverty rate, which could affect the demand for mortgages and the rates that lenders are willing to offer. The formal private sector in Lesotho concentrates on housing at the very top of the market, leaving the majority unserved by formal housing supply. As in other countries in sub-Saharan Africa, the great majority of housing in Lesotho is built by people themselves incrementally and sometimes in partnerships with small contractors. Lesotho has a mortgage interest rate of 9%. 13. São Tomé and Príncipe. High levels of poverty and joblessness in the country have resulted in a housing deficit of 60%. In 2018, the World Bank recorded that 86% of the population lived in slums or inadequate housing. São Tomé and Príncipe, therefore, have a major housing crisis but do not have government funds to tackle the crisis. They have signed an agreement with China to construct 200 social housing units. On the island of São Tomé, 60 new homes are being built in the Cantagalo and Lobata regions. There are relatively few mortgage lenders in the country, which has led to greater competition and lower rates. They have a mortgage interest rate of 8% based on the 2023 estimates by the World Bank. 12. Senegal. The Housing Bank of Senegal is a financial institution that is a significant player in the housing finance market in Senegal. In 2013, it held about 30% of mortgage-related loans in Senegal. It strives to provide funds to developers, housing individuals for the development of affordable housing in Senegal. One policy that has influenced mortgage rates in Senegal is the Plan for the Emergence of Senegal (PSC), which aims to promote economic growth and development in the country. Under the PSC, there has been a push to develop the mortgage market in Senegal, which has resulted in increased competition among lenders and lower interest rates for borrowers. Senegal's mortgage interest rate is at 8%. 11. Benin. The demand for mortgages in Benin remains low, partly due to the bank's stringent mortgage requirements and the size of the formal sector. The overall lending interest rate in Benin is relatively low compared to other countries in the region, which has also influenced mortgage rates. The demand for housing and the pressure on land is strong in this coastal zone. Currently, Benin has a mortgage interest rate of 8%. 10. Equatorial Guinea. There are several challenges facing the housing sector in Equatorial Guinea, including inadequate public housing, informal and self-construction dominating the housing sector, and poor families struggling to afford housing. One solution could be for the government to prioritize the development of affordable housing initiatives for those in need. It could also be beneficial to incentivize private investment in the domestic housing market and to reduce regulatory barriers that could prevent development. Equatorial Guinea's current mortgage interest rate is at 8%. 9. Niger. In Niger, the mortgage interest rate is 8%. Nonetheless, the difficulties of the housing sector and its financing are only reinforced in the context of an economic crisis. As demographic pressure intensifies each year, access to basic services remains a challenge, urban informality remains prevalent, and the low solvency of households hinders its citizens from having access to the housing market. 8. Eswatini. Backlogs, high inequality, and limited financial and gender inclusion all contribute to affordable housing issues in Eswatini. The country's housing is inadequate, and housing finance is largely undeveloped. The apparent unaffordability of housing is exacerbated by an ever-increasing urban population, with a 1.88% urbanization rate. The Central Bank of Eswatini's mid-year annual average inflation rate stated that contained inflation has capped housing rentals. Its mortgage interest rate slightly increased to 8% as of January 2023. 7. Togo. In Togo, in the capital Loma and most other cities, the majority of houses are informal. The number of rural and urban houses is not quantifiable. The average size of a household in rural areas is about 8 people compared to 4 in the urban areas. The country has 2 housing delivery systems, including properties and rentals. The Ministry of Town Planning, Housing, and Land Reform estimates that more than half of the Togolese population will live in cities by 2028, with an urbanization growth rate of 3.7%. Togo has a mortgage interest rate of 8% in 2022. Let's take a break. Hope you are learning a lot from this video. To encourage us to keep making videos like this video and subscribe to the New Tourist channel. Do not forget to turn on notifications so you get notified when we upload videos like this. Let's continue. 6. Egypt. Egypt has a mortgage interest rate of 7% as of January 2023. The Housing and Development Bank is an Egyptian bank established in Cairo on June 30, 1979. It is a significant player in the housing finance market and aims to alleviate housing shortages by narrowing the gap between low supply and increasing demand. What the government can do to encourage the growth of the mortgage industry in Egypt is facilitate the property registration process, which is currently a long and difficult process. This would definitely greatly help any applicant who wishes to take out a mortgage loan if the property he wishes to purchase is registered. 5. Djibouti. Djibouti has one of the lowest loan rates in the Horn and Sub-Saharan Africa, giving great real estate finance prospects. Low loan default rates may be due to poor biased credit procedures. In 2020, Djibouti had 2.12% non-performing loans, while the global average was 6.6% based on 121 countries. Djibouti currently has a mortgage interest rate of 7% as of January 2023. 4. Algeria. To meet the increased need for housing in Algeria, the authorities have implemented a number of programs, including the Public Rental Housing Program and the Rental Sale Housing Program. Despite these efforts, demand for housing is not matched by supply, with the housing deficit estimated at 1 million units as of 2017. Currently, Algeria has a mortgage interest rate of 7%. 3. Morocco. The maximum length for a loan in Morocco is 15 years. The drop in interest rates on housing loans can be linked to a multitude of factors, including the international economic situation as well as the state of the national real estate market, the report found. The low interest rates are also likely the result of the central bank's decision to maintain interest rates unchanged, allowing for banks to keep interest rates of conventional loans unchanged at a competitive rate. Morocco has a mortgage interest rate of 7% as of January 2023. 2. Burkina Faso. The economy is very vulnerable and highly exposed to internal and external shocks. The country's economic performance is deeply dependent on that of agriculture, itself at the mercy of climatic hazards. Burkina Faso has a relatively underdeveloped mortgage market, which has limited the amount of competition among financial institutions and resulted in lower interest rates. It's worth noting that Burkina Faso has experienced consistent economic growth in recent years, which could also be contributing to a stable mortgage market and low interest rates. The country has a mortgage interest rate of 7% as of January 2023. 1. Libya. Libya's geography makes much of the country vulnerable to floods, sandstorms, dust storms, high temperatures, and desertification. Climate change and significant water scarcity threaten the economic development and long-term sustainability of Libya. Numerous Libyans, mainly refugees and IDPs, are living in terrible housing circumstances. Rental prices are rising beyond the means of the average household, while the minimum wage has remained unchanged since 2011, thus making Libya the country with the lowest mortgage rate. Libya has a mortgage interest rate of 5%. It is clear that many African countries face significant economic challenges, including high inflation and interest rates, limited access to credit and financial services, and low levels of income and economic development. Addressing these challenges will be critical to improving the availability and affordability of mortgages and other forms of financing for individuals and businesses in Africa. Greater investment in infrastructure, education, and other key areas could help to spur economic growth and create new opportunities for African countries to participate in the global economy. It will be important for policymakers and investors to work together to develop effective solutions to address these issues and help promote sustainable development across the continent. We've come to the end of this video. What do you think about mortgage interest rates in Africa? Are you from any of these countries? Feel free to let us know what you think and your experiences in the comments section below. Like this video and subscribe to the New Tourist channel. Do not forget to turn on notifications so you get notified whenever we upload videos like this. Thank you for watching and see you in our next video.